Many individuals spend years dreaming about becoming homeowners, only to finally buy a house and realize they may have completely underestimated what they signed up for. That's becoming more common than most people think. Some who thought a home would instantly improve their life, but instead, they now feel financially stressed, overwhelmed, and trapped by expenses they never fully prepared for. And in some cases, people are saying they wish they had continued renting instead. Now, before anyone misunderstands this video, I am not trying to scare you away from buying a home. I still believe homeownership can be one of the best long-term financial decisions you can make. You build equity, you gain stability, and over time, it can absolutely help you create financial wealth. But I think one of the biggest problems today is that people are being sold on the dream of home ownership without being fully educated on the true cost of owning a home. Most are only focused on getting approved for a mortgage, but the mortgage payment is just the beginning. And that's exactly why I wanted to make this video. I want to properly prepare you for what homeownership can look like financially, so you don't become one of those people who regrets buying after the excitement wears off. One of the biggest mistakes I see buyers make is comparing their future mortgage payment directly to their rent payment today. Someone sees they're paying $2,200 a month in rent, and then they get approved for a mortgage that's $2,400 a month and think, okay, that's not much different. I can handle that. But what they fail to realize is that when you rent, your landlord is covering a huge amount of hidden ownership expenses behind the scenes. When you own the property, all of those expenses become your responsibility. And this is where reality starts hitting very quickly. Utilities are more expensive than people expect. The first major shock for many new homeowners is utilities. A renter moving from an apartment where rent and utilities were included, move into a detached home, are stunned when they see how expensive it is to heat and cool an entire house. Utilities consist of hydro, water, gas, and an apartment. This may have been included, or maybe you were spending a couple of $100s total every month on utility. But in a house, especially an older house, those bills can suddenly become several $100s per month, depending on the season. And if you find yourself that these numbers were not budgeted for, that's when you may start realizing that owning a home is not just about the mortgage payment. Then you have maintenance costs, which I think is the biggest financial wake-up call for new homeowners, because homes are constantly aging. Things are always wearing out. Something is always breaking. And when you rent, many of those problems feel invisible because somebody else handles them. Your furnace breaks, you call the landlord. Your plumbing leaks, somebody else deals with it and pays for it. But when you own the home, every single problem becomes your responsibility financially. And these repairs are not cheap anymore. A furnace replacement can cost thousands. A roof replacement can cost tens of thousands. Plumbing issues can turn into major bills overnight. Even smaller things like appliances, hot water tanks, sump pumps, garage doors, electrical issues, or water damage repairs can quietly drain your savings faster than people expect. And what's scary is that a lot of buyers are entering homeownership with almost no emergency savings left after their down payment and closing costs. So when the first major repair happens, it immediately goes onto a credit card. That's how people slowly become house poor. Not necessarily because they bought a mansion they couldn't afford, but because they stretched themselves too thin just to get into the market and didn't leave enough financial breathing room afterward. I think social media has made this problem even worse because people feel pressure to make their home look perfect immediately after moving in. They buy the house, then suddenly they want a brand new kitchen, new floors, new furniture, new bathrooms, new landscaping, and all these upgrades right away because they've been watching renovation videos online for years. But renovations are one of the fast ways new homeowners destroy themselves financially because renovations almost always cost more than expected. Once contractors start opening walls, problems start appearing. Maybe there's old wiring. Maybe there's plumbing damage. Maybe there's mold. Maybe something structural needs fixing. Suddenly, that simple renovation doubles in cost, and now the homeowner is financing everything just to finish the project. Another huge expense people underestimate is property taxes. This is becoming a massive issue right now because home values increased so aggressively over the past several years. Many buyers purchase homes assuming that property taxes they see today will stay relatively stable, but depending on the municipality, reassessments can dramatically increase your annual tax bill. And when buyers are already stretched near the top of their affordability range, even a few hundred extra dollars per month can suddenly create serious financial pressure. This is why I always advise my clients to research property tax trends before purchasing. Understand how often reassessments happen in your area and prepare for the possibility that your payment may increase in the future. Homeowners insurance is another cost people underestimate. Insurance premiums have been rising in many areas. So now you combine higher insurance, higher taxes, utilities, maintenance, and suddenly the affordable mortgage payment doesn't feel affordable anymore. And unfortunately, many buyers never ran the full numbers before buying because they were so focused on just getting approved for the mortgage. Banks approve based on formulas and ratios, but real life is different. Real life includes surprise expenses. Real life includes job uncertainty. Real life includes emergencies. Real life includes rising costs. And if you buy at the absolute maximum amount the bank approves you for, you leave yourself with very little room for error when life happens. This is why I advise my clients that getting approved for a mortgage is wonderful, but let's budget for the overall cost and not just the mortgage payment. Emergency funds are absolutely critical before buying a home. Buyers should not only have enough for their down payment and closing costs, but also several months of savings left over afterward. If something should happen after you move into a home, maybe not immediately, but eventually, and when it does, you want to be able to handle it without panicking financially. The ones I usually see struggle the most after buying are the ones who emptied their entire savings account just to get the keys. The second a repair happens, they're forced into debt immediately. That creates stress very fast. To summarize my thoughts here, home ownership is still an amazing thing. Renting may feel easier at times, but at the end of the day, you are helping build someone else's wealth instead of your own. Owning a home gives you the opportunity to build equity, create long-term stability, and create wealth not only for yourself, but for your family and loved ones as well. But the key is to do it right. Prepare well, budget realistically. When an investor purchases a real estate property, they review the entire pro forma of the project: the mortgage payment, property taxes, utilities, maintenance, vacancy risk, repairs, and unexpected costs. They analyze the full financial picture before moving forward. As everyday home buyers, we should approach purchasing a home with that same mindset, not to scare ourselves away from homeownership, but to properly prepare ourselves for it and reduce financial stress afterward. So whether you are purchasing your first home, second home, or your fifth, remember this: numbers matter, budgeting matters, financial breathing room matters, because successful homeownership is not just about qualifying for the mortgage. It is about comfortably living with the full cost of owning the home long after the excitement of getting the keys wears off. This is Rasha Ingrata, Mortgage Agent Level 2 with Mortgage Intelligence since 1999 here in Windsor, Ontario. Thank you and have a wonderful day.